Ladies and gentlemen, Jay Do and
Jonah
in the house for the Banking Bros here at the Cash Compound Coaching Hour. It is Thursday, noon 04. We almost made it. Noon 04 Eastern Time, Greenville, South Carolina, the northwest corner of the southeastern state. Ladies and gents, we are in studio here for Cash Coaching on IBC, or Infinite Banking. You can see that right across the top. And remember, if you get lost right here in this hour, we still got you. Join us on our platforms or go straight to the website, okay? The best website to get started is not just what you see on the screen, but it might be saveandspendsystem.com. We're going to teach you a system here of how to save and spend money at the exact same time. That's what it's all about. And someone taught us the truth about how money grows and cash flows 10 years ago. And we're just as excited, maybe more excited than we were back in 2015 this time. Jonah, what do you say?
Policy's getting better and better as we go. I'm getting pretty excited.
All right. But it's not just us here today. We brought along a few team members on our coaching staff today. So we got main coaches, head coaches, assistant coaches, defensive coaches, offensive coordinators. Let me introduce them here. Bottom left of our screen, maybe yours as well, we have got Sean King, Legacy Life. Sean, sound off, shout out, and rep your zone of influence for coaching.
Rep my city.
Or I don't know, is you like running backs coach? What are you? I was trying to be.
Yeah, bro, wide receivers coach. Come on, I'm not 6'4" for nothing. So what's up, guys? Sean King, based out of Pensacola, Florida. The brand is Legacy Life, much like we do here, just trying to help you secure your and your family's legacy for generations to come. Recently moved down to Florida here, so if you're in this greater area, not that weird hanging part down at the bottom where Miami is, but up here under the lower Alabama portion, let's talk, let's connect, let's possibly meet in person, but excited to help you guys here today. And as always, excited for a great conversation.
Love it. We've got you all over the country. Like I mentioned, we're in South Carolina. Sean is coming to us from the Bama side of the Gulf of America, right? Is that what it is now?
The Gulf
is it official?
The Gulf of the Americas.
I'm not saying
what about that?
The Gulf of the Americas, right?
Would be
Mexico
fine.
Is America. It's just.
Thank you. No one would have been arguing if it was Gulf of Americas.
It's true.
So
no, they would have been arguing. Have you been on Facebook lately?
Yeah, they would.
My goodness. All right. Speaking of arguing, ladies and gentlemen, we got the coach of the special teams here. Special K, short bus. We have got Jesse Durham in the building. He's normally in North Carolina. Today, he comes from us from a beige type studio here. He's got brother Benjamin Franklin, overlooking to make sure he stays on target and track today. Jesse, sound off.
What's up, everybody? Happy afternoon to you. My name's Jesse Durham from North Carolina, coach here at the Cash Compound. I love talking legacy, love talking infinite banking. Looking forward to today's conversation.
Yes, sirs. All right, Jonah. This is where we want to start this week.
All right, I'm ready.
This week we have lots of topics, ladies and gentlemen. By the way, what you want to do is throw in your comments, questions, and concerns into the chat right now. This is the time where people who actually practice what we preach. There's a lot of people out there in the coaching world, maybe the typical financial advisors, financial planners that may not be giving advice on things they actually do. All of us practice what we preach here. And what we preach, once again, is saveandspendsystem.com. The Save and Spend System, or our introduction to what infinite banking is and is all about. So lots of times I like to go into what has happened within the week. So I'm going to start off and tell you guys that I got a bill from an insurance company this week. I got a bill, and it is a bill for my annual premium. Okay, so premium is what you give to an insurance company. You pay, you put, you keep, you save. We might use those words interchangeably, but it's not an investment. I've bought insurance.
That's right.
Okay, sometimes people think it might be an investment around here because we talk about legacy life. We talk about family legacy, gifts. We talk about investing, but that's not what the product is. The product is actually an insurance product that we've bought. I got my bill. Jonah, I have been putting money into this particular life insurance product, It is a whole life insurance policy on me.
Yep.
Okay. I got it when I was 32. How old are you now?
32.
32. Okay. When I was 32, when I was your age, I was 32. I started a life insurance contract on myself. It is due March the 11th.
Okay.
Got my bill.
Yep.
Got my notice. And I'm excited to pay it.
Say what?
I'm excited to pay it. Okay. So we're going to take things back to why I started this policy and why I would be excited.
You know, I paid a policy premium myself recently.
Why do you have to change the subject to be about you?
I'm just saying. Now that you brought it up, I totally paid one. I paid it a little early.
Okay.
Believe it. You got a bill. You're excited about your bill. I got my bill, paid it early. Interesting.
Okay,
right?
so I'm going to ask you about that in a second. Here's why I'm excited. All right. Remember, put your comments, concerns, questions inside the chat. Shout out to our friends at the Cash Compound Facebook page right now. And also on YouTube. We're at The Banking Bros on YT, but we're also on TTIG and FB. Hit us up on any of those platforms.
That's right.
Here's why I was excited. It's because last year when I paid premium for this whole life insurance contract, yes, I've still got death benefit.
Okay.
But the money isn't just about when I die.
Yep.
My family's taken care of. They will have money and they will pretend to be sad at my homegoing service.
Some people will be sad. Yes. It just might not linger. Most people will be sad.
I don't think they will. I don't think anyone's going to be sad.
Why wouldn't it?
Because I got a whole plan. Number one, I have mapped out my service.
Okay.
Which is probably going to have to go to you to make sure it gets executed. Okay. Number one. Number two, the video at the end of my homegoing service will tell y'all where I buried the money in the briefcase.
That's fine.
And it's going to be a race
I'm
at that point.
very good at shovels.
As soon as
I'm
there's an
super
amen,
bad at shovels.
as soon as there's an amen, we out. And it's like, hey, you can go to the burial or you can go try to find this money. First one to get it wins.
We got to give a quick shout out to...
I didn't even get to my premium.
Yeah. But Captain Mangoz over there on TikTok, he's saying that he heard of this method before and he needs to learn more.
Okay, we're going to get to that. We're going to get to the meat and potatoes, but I want to catch you up on this past week. Appreciate you. And hit us up on, you said TikTok? He's on TikTok? Yep. Okay, cool. Well, here's the reason. Because I put my premium... Okay, if you can see me, if you're a visual learner right here, we've got the 3-cup setup on the table, ladies and gents, and I got my bill that's premium, the dollars I have to pay, put in. Keep or save. That's a weird way to talk about it, but I did that. I paid. I kept a death benefit, right? If I give an insurance company my money, they keep their paperwork on the books. They say, all right, we got you still. We got you. But in these types of policies, a reminder, everybody, in TikTok, if you're out there, we're shouting out to you, that there is an equity value, a net present amount, not just the future death benefit. They must pay, but there is liquid today. Must pay, death benefit, blue cup, liquid today, cash value. And there's why I was excited. Finally going to answer the question. When I put in, for every dollar that I put in premium, I logged in March 12th, 2024, the next day to my account, right? We log in to Netflix, we log into Disney Plus, we log into Wells Fargo. I logged in, I saw that my contribution of premium was pending. I saw that.
Yep.
I saw my death benefit, the contract. I mean, they're like, hey, there's big numbers for your family. It went up. It was higher than it was previously. And the amount of new available liquid cash value available, liquid. I could get to it. For every dollar I put in, there was $1.40 in liquid available cash.
Must be nice.
Okay, right? So we're going to go to Sean down there in Florida. Sean, can you help everybody out there who's new to this concept understand what happened? What happened with this? We're going to shout out to you. You're a great coach. You've been helping people do this for a year plus now with us. Why is this possible? What went on? Because now I gave everybody the reason that I was excited. How'd that happen, man?
Yeah, so I think when thinking about life insurance, people tend to get a little confused on that concept. I think it's easier tied to the equity in your home. We like to tie that death benefit to understanding
home's
that.
value.
So,
the home's value.
The home's value.
Yeah.
The cash value is going to be the equity in the home. So when you pay that premium, you're purchasing, like you said, that large death benefit. It can be large depending on your personal situation. But a portion of that death benefit you've already paid for. That is that equity portion. That's the liquid amount of the money. The insurance company is saying, hey, you've bought this death benefit. We're giving you this big portion if you pass away. But right now, if you want, you can get access to the available equity of that death benefit, the actual value today of the portion that you've bought in the future. So again, everybody's situation is going to be different. Their numbers are going to be different. But yeah, that's money that you can use, lose, or abuse, like you guys like to say, because you're so illiterate with all your little terms there. But it's just kind of like a line of credit, like a HELOC on your home, where you can get access to that money. You can go use it for a small price, but it's going to be a price that's going to beat basically every other option to get access to money out there. And you can get that money and use it tax-free because it's considered a loan. So I like liquid cash. I like being able to access my money. And I love a number that keeps going up and up every time I put money into that cup number 1.
Sean, I love it. Okay, that was a ring dinger, but can we get a little sound effect?
That's my fault. I got you, Sean.
Okay.
All
right, I love that.
I love.
All right, now we got some stuff jumping up from our socials. Yeah.
Yeah. Another guy from TikTok, 00 Steve, 00 Steve. He wants to know how much of his 12,000 can I use after 2 years?
Oh, great question, Steve. 00 Steve. Okay, let me answer that one, and then we're going to go over to Jonah. I want to know about your payment and your premium. We'll get Jesse to comment on that one.
Okay.
So 00 Steve, remember, your dollars go inside this cup. Hopefully you see us on a visual, Steve. We'd love to walk and talk through this on a free coaching call if you need the specifics. But this red cup represents the premium you're putting in. Maybe you're doing $12,000 a month. Maybe you're doing $12,000 a year, $1,000 a month. Maybe you've done $24,000. Doesn't really matter, Steve. But those dollars secure paperwork from the insurance company. Paperwork, peace of mind, pool of cash, and a payout.
That's right.
Right? That's death benefit, all P's. Cash value is how much of the death benefit, their money that we bought. Paperwork says all these dollars. Log in, you can see them. It's how much of their money is equity. So you've bought insurance and now you have change. In some circles, we don't use this term a lot, Steve. We're going to say overfunded. You've paid $20 from something that at the base price was only $14.99.
Mm-hmm.
So there's going to be $5 of change. Does that make sense? Now, I'm making up the numbers for you, Steve. But after the cost of securing the product of insurance, more and more of it all the time becomes more liquid, more equity, more available. But Steve, don't you worry, because I don't know the number exactly. The insurance company has told us on the paperwork. Day one, they've given us the minimum amount of liquid dollars. Rain, sunshine, sleet, hail, President Musk, Joe Biden, it doesn't matter. There will be cash value, at least at this level, guaranteed and liquid. We'll see it on the paperwork. Steve, we'd love to walk you through your own paperwork that you have if you're a little confused, or new paperwork because you want to do this process. We're going to see it on what's called an illustration.
Yeah, he's saying if he puts in 12,000 in 2 years, so maybe 6,000 a year, how much can be loaned?
Okay.
He specified.
Got it. Okay, so cash value is the total amount that is equity. You can get to it anytime if you call. The insurance company doesn't want you to overdo it. They'll give you about 90+% of it if you say, hey, give me all of it. If you call and say, show me the money. You remember that? Little Cuba Gooding? Show me the money. You call them or you log in and you say, hey, beam it down, Scotty. You can get to over 90% of these dollars liquid, no questions asked. And or whatever that number is. I'm sorry. So 90% of whatever's there. But remember, the paperwork and illustration will show you, because if something is compounding, becoming more efficient, 00 Steve, remember that it's always more tomorrow. If you wait 1 day, it'll be more money. If you wait 2 days, it'll be more money. It's always getting bigger. So it's not a question I can totally answer. Depends on how your policy was constructed. Depends on whether or not it was built this way on purpose. Depends on some things like that. But it'll be in the paperwork, Steve.
Okay, so Scoop 615 wants to know what type of policy it is. So I'll jump in, Scoop, and I'll answer that one. And I'll talk a little bit about why I was excited to get the letter in the mail. And then Jesse, I want to ask you a question too. So here's what's going on, Scoop. We are talking specifically about the infinite banking concept. And the infinite banking concept is set up the right way inside of whole life insurance policies. Now, here's where it gets a little tricky. There's a lot of news out there. There's a lot of new stuff out there. There's a lot of noise out there about some other types of life insurance. You've probably heard of this stuff. There's variable life insurance.
Right.
There's universal life insurance. There's a really popular one, indexed universal life insurance. And so basically, Scoop, what we are saying to you is we don't actually use any of those. We use whole life insurance. There's lots of reasons why we do this, but in my opinion, the one reason that I like to use whole life insurance most and best is because whole life insurance is the oldest one. It's the one that's tried and true. It's the one that doesn't have all the caveats tied to it. You don't have to learn so much to use whole life insurance. Whole life insurance is guaranteed by the insurance company that provides it. And I like that. I like the word guaranteed. There's not very many things in my life that have guarantees on them when it comes to money and finance. There just aren't any, right? Like I try to be, cordial and pay attention with my money, but there's not very many things that are guaranteed. So earlier actually I didn't get a letter. I'm sure I got a letter, but I get lots of letters. So I didn't open the mail. But anyway, here's what happened. I'm keeping track of when my whole life insurance policy has the bill due every year. I'm keeping track. Right. And so I saw that the bill was due in like a month. And I was like, mental note. I'll make a mental note.
Put it down so we can see we can see your mouth.
They can see me. Steve, you got me. I saw that the bill was due in like a month, and I thought to myself, mental note, I'll come back to this.
All right.
I came back to it, and bill's due in like a week. Sometimes forgot about that.
Wow, that month went by.
Yeah, what happened? I'm like, okay, let me call in. I got some time this morning. Let me call in. Let me make this payment, right? So I'm a little bit early on my payment. I call in, nice young lady. I'm like, hey, I want to make the payment. She's like, it's this much. You want to do the whole thing, half the thing? I'm like, no, the whole thing. I want to do the whole thing. And so I paid the whole premium right up front. And I made a mental note. I took a screenshot of my login so I could see what the values are.
Oh, yeah. Because you knew it was coming too.
And I didn't go back yet and look at my online login.
I want to see that. I want to see that in what we call a short or a TikTok or a reel.
Yeah.
I want to see that picture right there.
So anyway, I did pay mine a little bit early, and I was excited to pay it. And I started to realize that, just like you said, putting in $1 and $1.40 is coming back your direction. I started to realize I'm not sure I've got, because of the way that I've operated with my policies, I think I've only got 1 or 2 policies that don't produce more than I put into them now, because I put extra in a couple policies and the ones I use and don't use, that sort of thing. I think all of my policies are running pretty efficient right now, which is a really, really cool time to be involved in having these. I mean, it's
what a time to be alive.
Yeah, what a time.
Or to be dead, because your family's still good.
To be alive, I think. To be alive for sure.
Right.
But that's my question for you, Jesse. Jesse, what tell us more, man. Do you have any policies that are putting in $1, coming back $1 plus? How about them premiums? Are they due? Tell us, give us some insight, man. What you got going on?
Yeah, I'll give you the insight, but I'll still also tell you that I'm still laughing about the whole hurry up and grab a shovel at the end of the service scenario with JDU. That's hilarious. Yeah, so May, July, August, September, October, December. I mean, these are the months that I know, like you, that I've got premiums that are going to be due on this system of policies that my wife and I have acquired now over, close to 10 years. And we're stoked. Those are the times of the year that we look forward to. And yes, many of those are quite efficient. We've got some newer ones that are right at that tipping point, which is so important to people, especially early on. But I'm telling you, giving the right time for maturation in these policies is an essential step. Like Nelson in his Becoming Your Own Banker book has this principle of don't be afraid to capitalize. It's like starting a new business. You're capitalizing it in the beginning. But yeah, when you get to the point to where you've got a policy and it's coming up on its 10th year, its 10th anniversary, a really cool time to see that dollar go in and then have that net worth increase, right? The net worth increase with the death benefit. I mean, we've created a multiple 7-figure net worth for our grandchildren who aren't even born right now,
Oh yeah.
while still having an ongoing, thank you. It's cool, right? It's a milestone. It's a milestone that we've passed at this point, and that's really cool. But also having a compounding pool of capital that we're using for the things that we are doing this year at the same time. So yeah, best of both worlds for sure.
Sean, here's my question for you, man. I also alluded to this. When I put premium inside these types of policies, it's going to help that guy who asked the last question, whoever it was after below Steve. Hopefully you're still out there. Let us know if we're answering your questions. You can say yes, no, maybe so in the chat. But I mentioned, Sean, that not only was there more liquid cash, but my death benefit went up as well. So
Big
this
deal.
guy was asking, like, hey, what type of policy is this?
Yep.
Most people who do have life insurance realize, wait a minute, the death benefit doesn't change. So help us understand the construction of these types of policies a little bit. We always call them custom construction. So why does the death benefit go up?
Yeah, so there's, again, the gentleman asked what type of policy it is. We said whole life. Now, there is a very specific type of whole life that you're going to want to get. It's got to be properly structured from a participating, mutually owned life insurance company, and preferably, if you're going to practice infinite banking, one that allows you to overfund it and have that paid up additions rider on it. So when we're putting in the way that we structure these specifically for infinite banking purposes, when we're putting in that premium and it's giving us this death benefit and providing us with cash value, there's a couple options that we have. We can take our money out when new premiums come up, we pay again. But anytime let's just talk about the new year, the new policy year comes up and we put our premiums in Cup 1, that is providing us with new death benefit, more death benefit on top of our original death benefit. So I'm paying the same amount, but my death benefit is increasing every year. Another option is when I'm taking loans out of my policy, that cash value that I'm utilizing, and I decide to pay myself back like any good banker would, or like that you would to your normal bank down the street. I'm paying myself that interest that I would have been paying to a third party. That interest is going back into Cup 1, and anytime money goes into Cup 1, it's increasing the death benefit. And then really the third option is why we like to choose a mutual participating whole life company is because we get dividends. So with our policies, how we structure them, when they say at the end of our policy year, hey, we got some extra cash for you, a little dividend that we're going to kick back to you. Where do you want us to put this? You know what we say? Go ahead, toss that money on top of my other money in Cup number 1 to increase my death benefit, give me more cash value, and give me a larger future dividend.
Love it. I think he nailed it on the head.
Yep.
When we have our 3-cup setup right here, you can see, some of you can see that I got a little shot of dividends right here. I did a little origami right here. What type of hobbies y'all got going on?
Not origami, unfortunately. It would be cool to make an elephant or something.
I got an elephant over there. Okay. But this little shot glass are those dividends in our 3-cup setup. We have this 4th little glass that Sean was talking about. If you are utilizing a stock insurance company at the end of the year, a policy is not going to get any dividends with a policy holder. See, at the end of the year, as long as not everybody died, not all cars crashed, not all buildings burned down, the insurance company took in enough premiums to stay in the game. They did not have so many claims. They cannot pay the people in the building, and they cannot pay the claims. They have profits. We want them to stay in business because as a participating, that's what that's all about. A participating policy owner, you get a cut of the profits. That's what being a mutual insurance company policy owner is all about. The policies that you have, most likely, ladies and gents, at work, or maybe even personal, the ones with all the commercials on TV at the halftime show, those probably are the stock companies.
Mm-hmm.
And they're going to give those profits as dividends to stockholders. So that's one difference there as well.
All right. So about 2 weeks ago, I asked this question into our Facebook group and also on our YouTube channel. I want to go over the question and some answers in our next chit chat section. All right. So about 2 weeks ago, I asked this question. The question was pretty simple. I said, you win $10,000. You win $10,000. What's the first thing you're doing with the money? I got a lot of responses, but before I go into what the other people said, I want to hear what you guys have to say. So that's the question. I don't care how you won it. I don't care if it was lottery. I don't care
Mr.
if
Beast.
you Mr. Beasted it and we're on Beast Games, or you dug it up at the with the shovel at the funeral. It doesn't matter to me. But my question for you, Jesse, is you win $10,000. What are you doing with the money?
Yeah, I was sharing this first step that we take with money on a call earlier today as well. It's to our private banking system. We are going to pay some of our regular scheduled premiums. If the timing's right and we get the windfall, we're going to pay more of our regular premiums like we were just talking about when those notices come due. If we can pay extra premium, then we're going to pay extra premium. Like you were talking earlier, like you have manipulated, you have with your behavior, grown your own death benefit, grown your own cash value, your cash values, increase your dividends that you'll be able to earn in the future by paying extra premiums in your policies, Jonah. So that's what we're going to want to do as well. Pay more premium.
Jesse, I have a feeling that you're in the minority here. You're saying I get $10,000. The first thing I'm doing with it is putting it into life insurance. I can't expect the people at home are thinking the same thing. Right?
I understand.
Sean, what do you win $10,000, man? What's the first thing you're doing with the money?
So I am also lucky enough to have a premium payment coming up here in April, which I will be paying in March because I want to pay that bad boy early. So also in the minority, I would be putting that, just like Jesse said, well, let's forget the policy payment I have to make. I'd be putting that into my paid up additions, that extra portion of my policy where I have that room, which I will definitely have that room. And then because I don't want to ever lose the use of that money, I put that 10K in there so it works for me. It compounds for me continuously for the rest of my life. And then I'm taking that 10,000 out or whatever they'll give me access to, 90+% of it. And I am sending that off to go make me a bigger return on my investment elsewhere.
Okay, so I think I resonate with the second part of that, and the people at home that are listening are probably going to resonate with the second part of that. What you're saying is you're going to use the $10,000 to make more money, right? Now, the first part was the same as Jesse's, though. You're saying, hey, you're going to put your $10,000 into whole life, and that's two people.
Right.
Now, I know they're on our
Right.
Cash Coaching Infinite Banking
Right.
live.
But I have a different answer.
Okay, I'm ready for your answer. Because Ed Dowling 256 say the first thing he's doing
I know Ed.
is paying taxes.
Ed is smarter than that. Ed would put it in policies too, but
Okay.
it is tax time,
Yeah.
right?
It is
We're
tax
looking
time.
at getting all of our accounting done,
Yep.
our 1231 stuff done. I just finished mine. I have an assistant now who's helping me navigate that. Y'all got your taxes filed?
No.
How about you
Sure
guys?
do. Just paid mine.
Look at
Yep.
that.
Paid it from
Jesse's-
the policy, baby.
Jesse says no. Okay. First thing I'm doing is saying thank you, Mr. Beast. Thank you, Jimmy.
You
Very
gonna call
first
him by
thing.
his first name.
Yes, because I'm gonna be on that show.
Okay.
Second thing I'm gonna do is a praise dance.
Mm-hmm.
A praise dance. If you are on our Facebook page or our group, we have a private group with about 900 people who are inquiring just like you. How do I actually do this? What's going on? What is Infinite Banking? I've heard about it before. Join us at Infinite Bankers. Okay, Infinite Bankers, plural, is our private group. We control that, and we have a community of people in there. And inside there is where we ask these questions. Jonah's always dropping stuff for us to ask, or he's going to ask it himself, so we can get you around the culture of what's really going on and why is it happening like this. We want to talk to you inside that group on your own time. You don't have to be on the lives. Infinite Bankers. So in there, I put the first thing I do is a praise dance.
Okay.
Because I wasn't expecting $10,000.
Ed wants to clarify. paying the taxes from the cash.
There we go. I told you Ed
Yep.
knows.
Okay.
Ed, I appreciate you being out there. Ed is on TikTok with me from time to time. He's in there in the comments at the Banking Bros on TikTok. Can you download it now, or is it still not downloadable?
You can download TikTok. We're back.
Okay, very good.
We're back, baby.
If you want to see me live, I go live in there as a solo coach, probably about 4 to 6 hours every week in the afternoons and evenings, East Coast time. You can find me and Ed in there fighting for our lives in these comments. So appreciate you. But the first thing I'm going to do is a praise dance. Second thing I'm going to do is store the money inside my policies, or maybe get a new one. Nobody mentioned that. So if you have maxed out what could be held inside your policies, base premium, paid up additions premium, Sean mentioned, there may not be any more room. You may have to have another kid, start another policy on yourself. That means you might have 1 or 2 or 3 or 4.
Yep.
Put one on the missus, something like that.
Okay, so here's what some of the people in our Facebook group said. I'm going to go straight down. I won't say their names, but I'm going to give you the answers live from the Facebook group. So my good friend Linus N. I'm going to do first names and last initials.
You got to protect the wealthy. Don't tell everybody.
Linus N says into the policy. Starting new policies. He actually did the first answer. He said start new ones. Max out the current policies, start new ones. Okay. Lindsay V, straight into my whole life insurance policy. Ryan J, we got an answer here, a different answer. He says his first thing he's doing is paying down debt and investing. Now, I also Googled this question. You win $10,000 was the first thing you're doing.
You just Googled
it.
I see.
AI.
Okay.
Because, you know, you got
Gemini
over on Google, or you can use Chat GPT, or you can use Grok. What is the Twitter one? Grok?
Yeah.
I don't know how to say it.
Elon just came out. Yeah.
Grok, right?
Uh-huh.
Or DeepSeek. There's so many now. Cyrus. I don't like saying the name because they'd be talking back to you when you say it on accident. They just be turning your lights off and stuff. If you say that, you talk to them and they're like, we don't know that. And they give you all this Spanish. I don't like it. But here's what AI says over on Google. The first thing you should do, assess your current financial situation, and then prioritize paying off high interest debt, contributing to an emergency fund, or investing a portion. So Google and Ryan J have the exact same answer.
Now, here's another, but that's a good point, because my emergency fund is stored inside my ever increasing cash values.
Yep.
That's where I keep it. Once again, it's not an investment, not a game. We're talking about cash value. That's where my emergency fund sits.
Yep. No. So here's my question for the other two gentlemen here. I totally get how people would earn money or come into money, and the first thing that they want to do is use it to eliminate bills.
Yeah.
Or invest it, trying to make more. I've got a little bit of a problem with both of those. And the problem that I've got with both of those is that if you do that, you don't have money anymore. Right. So here's what I'm thinking. I win $10,000 and I want to pay $10,000 toward my student loans, for instance. Right. And so you send your $10,000 to whoever they are, for Freddie, Mac, Sally Mae, and you're like, woo, student loans paid down or off. And you're like, yeah, excited. But you ain't got no, how are you eating tonight? Like you don't have any money. You spent all the money.
You got to go back to school in that frat house so you can get a slice.
Right. And that's the problem that I don't think people think about that so often. Jesse, what's your thoughts on using your money like that, using cash and
now, Jesse, here's my question. When you got into this 10 years ago, you had debt. So how did you go about, you got new checks in your life. I'm assuming you've gotten a few checks in the last 10 years. Where did they go? How did you tackle debt? Are you still tackling debt? What'd you actually do?
Yeah, so right at 10 years ago, we had that traditional all-American spread. I would say we had the credit cards, we had the family car note, we had the student loans, we had the mix, right?
How much in credit cards and student loans?
I can tell you off the top of my head that the total number was 50,000.
Okay.
I've broken it down in videos on my channel, Durham Talents. But the total for us was 50,000 at the time.
All right. Yeah.
Yep. So when we saw infinite banking, we saw a way for us to be able to add one step to what was our goal. So I think like when people are saying, I want to invest, I want to pay something off, you're focusing on the goal, and that's great. what we would challenge people to consider is, what if you put one step in front of the goal and use that one step as the means, the more effective, more efficient way to accomplish the goal? Get that multiple use of the money like Jonah was talking about. So that's what we did. We added the step of paying premiums, sending our cash flow towards the policy first. And then it got the death benefit there, it got the cash value, we earned dividends, all that stuff. And we used the policy, we used an asset to pay off our liabilities. So the analogy I would use is, think of it as seed in a garden. If I had a garden last year and I took all the seed and I ate it all, I consumed it all, it's gone, I don't have it anymore. If I don't keep some of that to do more production to have a garden this year, I'm not going to have a garden this year. So being effective, being efficient with cash flow by adding one step. That's what I would say.
I like that. I like that a lot. Exactly what you mentioned is something that I struggle with. I really don't like that single use of money thing. I've talked about this before. When I first saw infinite banking, I was a younger guy. I had saved up some money. Like, I was working regular jobs. I saved up money. I don't remember exactly how much it was, $5,000, $10,000, $15,000. I saved it up, but I was strict with that money. I just had I was not trying to use it at all.
Right.
Because it was like, I didn't know, I didn't have theory behind it, but I knew in my heart and in my head, I know that if I spend this money, it's gone. I worked really hard to get the money, right? And it's some sort of I don't know, like a little bit of a status symbol to log into the bank account and to see digits in there, right?
But you have to log in with somebody to get some status.
It's about self-confidence. That's confidence in yourself, right? Anyway, but I was logging in and I was just like, I'm just not going to use it. I don't know. I wanted stuff. I want to buy stuff. I want to do stuff. And I was like, but I don't want to use my money to do it. That's all I knew. Right. And so now fast forward a decade, 10 years in infinite banking, it's completely changed my thought process behind stuff like that, because now I still have it. Now, this idea that I don't want to spend the money, I still have it. It is intrinsically buried in there. I'm working really hard to get it out because I still own cash value and I'm still going, I don't know if I want to use it.
Right.
I still have it, but I feel way more confident in using cash value than I do anything else.
I agree that it is a paradigm shift. We say that a lot around here because it all depends on how you think. And we do have these dollars. I realize that I have several hundreds of thousands of dollars now that is still with me and still acting upon these greater and greater growing contracts.
Yep.
My money is still there. Somebody out there is wondering, well, how do I get my money out of it? So from time to time, we get those types of questions. What's crazy is you're buying OPM. Throw that in the chat if you know what that is. You're buying OPM. It's becoming more and more liquid and efficient for you. And you do still have your money.
Yep.
Your money can actually be taken or withdrawn. It can be used in maybe retirement. You don't want to use it now and stop the bum rush, as they say. You don't want to stop the growth of what's happening, but your dollars are still working for you. And I realize that in 10 years, I have saved, kept, and put over several $100,000 inside these contracts.
Yeah.
And so you do have to change the way that you think.
Yep.
Yeah,
absolutely. I track that number. You track your number?
I do. I do track my number, and I see that last year I went over 200,000 at some point last year. I put that inside the Infinite Bankers group. When I realized I just crossed that line, I put it in there. I was trying to have a little celebratory time because some people think that's crazy. In 10 years' time, you've given away $200,000 of your money, and I have to remind myself and others I still have it, and it's still working for my family.
Yeah, get them PUAs going, man. I got you by a few.
You do.
Digits.
Well, I saw your numbers, and I had more kids than you faster.
That is true.
Yes, one.
That's true.
Two, I actually went into entrepreneurship way before you did, so I was broke for a while in there. So I just started making money. Yeah.
Sean, I got to give you a shout out here because I recently saw a short that you did on the Rule of 72. You remember making this video? Okay, so I saw this short on the Rule of 72 that you did, and it inspired me. I'm going to make a video little YouTube video on the rule of 72. And if you don't know what the rule of 72 is, basically it says you take 72, you divide it. Now, correct me if I get it wrong, Sean, but you divide it by the interest rate of your investment, and that tells you how long it should take your investment to double. Did I get that right?
Yeah. So you basically got it right. And I just pulled this up because I want to give everybody what Google says it is. The rule of 72 is financial rule, the rule of thumb that estimate how many years it'll take for an investment to double at that given annual interest rate. So, if it's in my video, I talked about like 8% or 6%, 12%, something like that. So, it's a fun little rule. Again, you probably saw it on, I don't know, YouTube or something. Go check it out, Legacy Life. But just kind of finding those quick little ways to just do the math in your head. I'm a numbers guy. I like to understand, hey, once I can see what's possible, it gets me a little bit more excited. Now, you got to go find that rate of return that you're looking for to double that money. But for some of us, that's not too difficult.
Yep. So the reason I brought it up is because my first ever private lending deal that we did the same gentleman around the same time, I think.
Yeah.
If you remember, our friend from Maine, right?
Okay.
Was that your first? That was the first one I ever did. It was, I think it started back in 2019. No, I have the dates, but I think it was 2019. So the first ever private lending deal that I did is coming to an end. I finally asked for the funds back.
Oh,
I should have them Thursday or Friday.
Okay. So you've been paid on that. So you lent somebody money. Explain to people what private money lending is.
So if you're not familiar with private lending and private money, we have a gentleman, a friend that we can introduce you to or help you get that direction. I've actually got a call tomorrow with a gentleman, Michael H. First name, last initial, Michael H., who's like, you got to introduce me to somebody. I'm ready to go. Just started his policy about 2 months ago or so. Ready to go. His mom's actually in underwriting, Eileen H., if you know what I'm talking about.
I don't.
But anyway.
I'm like, do I know who these people? Should I know?
Probably. But anyway, it doesn't matter. Here's what private lending is. And a lot of us, how we do it, we take the cash value that generates in the policies, not our cash. We take the cash value that generates in the policies and we loan it out to a lot of times people who are really, really invested and interested in real estate transactions. That could mean a lot of things. That could mean note buying. Things. That could mean flipping. That could mean, land development, all that stuff. And we loaned it to this gentleman. He lives in Maine, back in 2019 or 2020. I loaned him some money. You loaned him some money. Mm-hmm. Another one of our partners loaned him some money. At one point, we even went up to Maine. He took us around the town and showed us some of the places some of those things that he put the money into. Right,
restaurant over here.
So we're feeling pretty good about this. I felt great about it because he's paid on time every time. You know that cartoon? Anyway, he paid on time every time for about 3 years of time. And
2019 to 2025
is not 3 years. Exactly. But here's the point of it, Sean. I realized that I killed the rule of 72. Absolutely murdered it because it says on that interest rate it would take like 6 or 7 or 8 years or something for my money to double, and I'm positive that I've doubled it up to that point, up to this point, which is one of the reasons I said maybe it's time to bring it on back.
Trying to get into a new deal?
Yeah, probably.
All right, it's a good dude, and it was it was great. I stayed in the deal for a year. I gave him 5 figures. Multiple 5 figures, and I stayed in the deal for a year, and then I had cause to pull the money back and look at other things that I needed to buy, not just invest in. But yeah, I actually forgot about that deal.
Yeah, I didn't. On time, every time, every month. But anyway, I think I'll probably make a little bit of a video on that with the rule of 72, and I'm going to put in the real figures. So if you're not familiar, you should just go follow our YouTube channel if you have not. That's called The Banking Bros. We put up videos every single week, and one of the new videos coming up, maybe a week or 2 weeks out, you'll see my video on the rule of 72, but I will detail kind of explicitly, I guess, the deal that I did, how much I made, how we did it. Possibly I've got some photos somewhere, right? Maybe that I can include in there.
Oh yeah, when we went up there,
of like the real properties and stuff like that. I think people would enjoy that. So,
okay, ladies and gentlemen, a reminder that our cash coaching is available to you. We want you to get on the phone and talk and walk through that. I had a call with a lady today. Her name was Capital J out there. I guess I'll just say the first initial.
Okay.
But she was, where was she? Ohio. So I had a call to Ohio today. A lady had walked and talked through some of our videos, some of our live experiences, and said, you know what, I'm going to call these guys. And no, actually, she was a part of, she had done that, but she originated from a friend in Texas of hers,
Okay.
who runs a spa.
Okay.
And I had done a presentation for some of his friends. So that was like a month ago. And she said, hey, we need to talk through this. I like it. I watched the videos after you did the live. And I think that this is where I need to fund my next spa from.
Oh, nice.
I need to leverage my policies that don't exist today privately, not through a bank loan, through my own loans. And me and my husband need to chat with you. So we set that up.
Big understanding from
right away.
applause.
She totally understood that. And so she saw our save and spend system. If you can't find us live, saveandspendsystem.com will get you to that recorded version produced especially for somebody who's ready to watch it on their own time. And then pick a time from the calendar links that pop up where you can have one of our coaches, maybe me, maybe Jonah, maybe these guys, walk and talk you through how to get started. We're going to set you up with a custom constructed policy that'll work like this every time.
Yeah. What other things are new with you guys down here? What's happening in the policies right now? What are you purchasing? What did you just recently pay off? Give us a little bit of an update. Somebody tell us what is new in the infinite banking space in your world.
Yeah. So like you guys had mentioned, we were talking about tax season. None of you guys have paid your taxes yet, but myself.
I mean, why you got to say it like that?
Right.
I'm working on it. I
I
mean,
don't know. Maybe you guys aren't. I don't know. So again, I don't know if you guys got a CPA. If you got somebody that handles your taxes. But
he acted like we never heard of it.
Right.
Hey, I'm not talking to you. I'm talking to people out there.
Gotcha.
You guys don't have a
Yes.
CPA. It's worth it. Spend a little bit of money to make sure your taxes are done right, especially if you're a business owner. God, I hope you have one. You're not just doing it on TurboTax. But we did our taxes, and we owed a nice little chunk of money this year, which is good because when you're owing money, that means usually you're making pretty good money and not a W-2. So I got money to give. But it was a policy loan, of course. I mean, go into the policy, and it, like you guys said, both Jesse and you, Jonah, it's so hard to change that mindset of giving up money. Like, I couldn't imagine going into my personal bank account, not my infinite banking policy, but my personal bank account, pulling out I'm not going to say how much I owe, pulling out money and sending it to the IRS. First of all, I don't like giving money to the IRS in the first place. But sending them that money and never making another penny off of those dollars again. So
I got a sound for giving money to the IRS, Sean.
Ain't nobody got time for that.
Right.
Ain't nobody got time for that. So pay the tax thing. And then you and I were talking. Also, had recently sent out a nice little chunk of money to an investment that we're doing that we're looking forward to getting some nice, solid monthly returns from. So excited, utilizing the policy and really in that stage of making money with our money, which is,
I love that.
It gets exciting when you get there.
I love that. Shane, big shout out to Shane. Shane's over there on YouTube watching us. He said that recently he refinanced his Turo car to recapture his payments and interest. And then he also said he's got a handful of loans out there earning interest also. He's doing a lot of work in the Private Money Club, which has some affiliations, and you'll see some things coming from us together with the Private Money Club coming very soon. Man, I think I've officially, I mean, how long has it been since you first logged into the Private Money Club? It's got to be another 5 years for me. The first time
that may have been around 2021.
Yeah, maybe 2020, 2021. So really like the idea behind the Private Money Club being a private lender. That's a big deal. That is how I've made a significant, I mean, that's almost all of my investing strategy for the last 5 years has been being a private lender. Once I learned about it, I went, that sounds pretty good. I'll go all in on that. So I used a significant amount of my cash value, basically all of it that wasn't already outstanding from paying off bills and stuff.
Mm-hmm.
And I sent it out on a handful of deals, left, right, this way and the other. And a significant amount of them are coming back now. which is, I had a big amount come back in 2022, and I think I sent them out again. And then I got all of them basically coming to fruition and coming back now, which has been really helpful too. And I'm looking to do something new and exciting next. So that's always fun. So
we got a lot of things happening, I'm sure. Jesse, here's a question that I have for you. Shane, throw it up there, that recapture word.
Recapture word. I threw up Nelson. Nelson said, anybody got time for that? Is one of his statements.
Nelson, what's up? Nelson H. Okay, so Jesse, Shane used the word recapture, and I want you to answer this question. What does it mean to? How would you explain recapturing? Taking on borrowing power internally, paying back dollars to yourself. What does that mean? Like, walk us through some of that.
Yeah, so me, Shane, we're all accustomed to conventional finance. So everybody's used to typically owing the bank for our car or for our home mortgage, or owing Sally Mae, the student loan, just whatever. So we're used to that. So that just means that we've abdicated that responsibility and opportunity to someone else. So they have the control. We're providing them with collateral. I mean, if we don't pay the car note, they'll take the car out from under us, right? So they've got the control, they've got the collateral, they've got the cash flowing to them, right? See how through C3 or 3C right there? I thought you'd like that.
Mm-hmm.
And recapturing it just means what was ours in the first place, but we abdicated that to someone else. We gave that responsibility and opportunity to someone else. And we're bleeding out interest dollars on all those things: the homes, the cars, the mortgages, the student, loans, all that stuff. So recapturing is what I was trying to describe earlier when I was saying we just added one step. We had debts, we were paying them off, we wanted to pay them off even quicker, so we just added the step of reacquiring the banking, the financing of those debts first. So we recaptured it. It's ours when we pay off the credit cards, and then we go and start paying off the student loans, and then we go and we pay off the family car, right? When we worked up that debt snowball. So it's a debt snowball. People are going to be real familiar with that, but we recaptured that financing. So now that's just more cash flow that we can recapture also back into this system that we've created. So it's just adding that one step still to a debt snowball. It's just adding that one step to paying off the debt, but now we've recaptured it. It's ours. We own it. We have the responsibility back. We have the opportunity to earn back.
Jesse's mentioned that idea of recapturing and refinancing with one step. Ladies and gentlemen, if you're ready to start that one step, we've got a call and conversation for you. Our cash coaching here at the Banking Bros and the Cash Compound with our other coaches is absolutely free. So we want to find you if you cannot find us, but we cannot find that conversation unless you click a button somewhere. Find that link in our bio. And we want to have conversations with people about their cash flow and about their crunch with their credit and their charges and their debt as soon as we can. We want to help your dollars to be in a compounding position and moving toward you and recapturing the dollars that leave your family. So that is your task. Until 2 weeks from now, we will not be live next Thursday. Next Thursday, we're all going to be together in Orlando for an annual meeting with the brainchild and the brain trust of Nelson Nash. His group, and literally his children and grandchildren who run that group, the Nelson Nash Institute, are having their annual meeting. It's called a think tank, and we will be there in Orlando with several of our coaches. So we will not be here this next Thursday in March. We will be the second week. Come back, find us. We will talk very soon. Big hand clap out there to both of our coaches who joined us today. Sean at Legacy Life, Jesse W. Durham at Durham Talents, and we will catch you guys on the flip side.
You are now tuned to the Banking Bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.